Hello everyone, this is CA Dhananjay Bhave, faculty at Yashas Academy, Bangalore for CA Intermediate and Final Cost and Management Accounting and Strategic Cost Management and Performance Evaluation respectively. In this session, we will be discussing the basics of standard costing. I will be covering the fundamental concepts of standard costing, specifically material cost variances. This will be a session 1 of material cost variance and standard costing chapter as a whole. Lot of sessions are planned to be uploaded on YouTube for the common benefit of all the students. First of all, what is standard costing? What is variance analysis? Let us understand. As we all know, it is always easy to plan things, but very difficult to execute them. What happens with me individually, what happens with you individually, it's the same thing that happens with the company as well. Planning is always easy. Executing is where the challenge is. But the mistake that you and I do is after we execute, when things don't go as per the plan, we don't sit back and compare what was the plan and what is the actual, where did we go wrong. We do it, but very rarely. But as a company, we can't take things lightly. It is important that we compare our expected result with actual result. Standard costing does exactly the same. So in simple, what is standard costing? You first set a standard, a target for yourself. Then end of the month, end of the quarter, or end of the year, when you have the actual performance, actual results with you, compare your standards with actuals. Identify what went wrong, what was the reason behind all the variances. Variance is basically the difference between what should have happened and what has actually happened, and what corrective actions can we take in the days to come. So in this chapter, we will be studying all the variances. As I told you, variance is the difference between standard result and actual result. We study all cost variances. We study all income related variances. Let's understand first. Standard costing means the comparison of actual cost with the standard to know the difference. Is standard costing only about comparison? The answer is no. We have studied standard costing in CA Intermediate also, if you remember. Yes, I am using the phrase if you remember because I know most of you don't. Intermediate or IPCC or PCC, standard costing was there. So what was the focus in CA Inter and what is the difference between Inter and final syllabus? Let's understand first. There, the main agenda at intermediate level was to calculate variances. You have the standard data, you have the actual data, you calculate the variances. Here, no doubt we have to do that, but that is the initial part of this chapter. Say 50% is to calculate the variances. The other 50% in CA Final is they give the data, they give the variances also, and they will ask you to analyze, they will ask you to interpret, they will ask you to suggest the corrective measures, the actions that management has to take to ensure that in future these adverse variances, I will discuss adverse variance now, adverse variances don't occur in future again. So in intermediate, it was only about calculation of variance. Here, it is not just calculation, it is also the analysis of variances. But to be able to do analysis, we should first know how to calculate. So about 50% of this chapter is about calculation of variances, 50% is analysis and interpretation of variances. So standard costing is not just about setting the standard, comparing with the actuals, it is much beyond that. The difference is known as variance. It is necessary to know the variance so that company can find out the reason for such a variance and take remedial measures in future. In simple, my standard cost was 100 rupee. I have actually spent 125 rupees. Now there is a 25 rupee of variance. Now this is an adverse variance because I have spent more than the standard. What is the other possibility? Standard cost is 100, actual cost is 80. Then you have favorable variance, a variance of 20 rupee, which is indicating a saving which is beneficial to the organization. Now, are we to understand that adverse variance is always bad and favorable variances are always good? Answer is not always. Yes, adverse variances are bad, favorable variances are good, but favorable variances always being good also is a sign of caution. We will get to know in the chapter. When we study in detail, you will get to know. Understand, standard cost is what we have used in our cost sheet. In cost sheet, we calculate estimated cost, we fix the profit percentage, we add the profit percentage to fix the selling price. If you always have favorable variance, then understand you have always charged more to your customers. Correct? You expected higher cost, you took higher cost in the cost sheet, added profit, charged selling price to the customer, higher price. And at the end of the month, you see your actual cost is so less and you say, look, there is so much of favorable variance, we must be doing a fantastic job. But understand, you always have favorable variance means you are always overestimating your cost, you are always overcharging your customers. Someday customers will go from your place, your shop to some other shop, and they will start buying goods from there because you are overcharging. 1 month, 2 months, 5 months, 1 year, they may not get to know. Today we live in an open market. It's a competitive market. When everyone else is charging 25 rupee for a product, if you are charging 29 or 30, for few days customers may not get to know, but some other day people will find out that you are too costly, you are overcharging them. So always having a favorable variance is also not a good sign. It is just like too much of sweet. Yes, we will study all that in detail. So what are the steps in standard costing? First one, ascertain the standard cost for each element. You need to set a standard. Each element means material, labor and overhead. In this session, I will be discussing material cost variance, that too fundamental concepts. I will do one more video to discuss material cost variance in detail. How do you ascertain the standard cost? Understand that first. If one unit has to be produced and if I am saying 5 kg is required for that unit, 5 kg becomes standard. How do I set this standard? It is based on my number 1, past experience, number 2, the technical knowledge that I have about the product. I repeat, standards are set by considering 2 factors. 1, the past experience, because I have been producing this product from so many years, so I will know how many kgs are required to make one unit. Number 1, past experience. Number 2, technical understanding or technical knowledge of the product. With this, I set a standard. Standard cost is like a benchmark. End of the period, I measure the actual cost incurred. It can be monthly, quarterly, half yearly or even yearly. Step 3 is comparing the actual cost with standard cost to know the variances. That is, standard cost was 100 rupees, actual cost 130 rupee, 30 rupee negative variance, we call it as adverse variance. That is step number 3. Analyze the above variance in order to find out the reason for such variance. This is the most important part. We should have spent 100, we have spent 130. 30 rupee adverse variance, understood. What is the reason for 30 rupee adverse variance? Is it because we consumed more kgs? Is it because we paid a higher price for the same quantity? Or is it combination of both, that I consumed extra kgs also and I paid extra rupee also? I need to analyze the reasons. What if there are 2, 3, 5 raw materials? It may so happen that when you mix them in wrong proportion, because of which you have variance, adverse variance. Now what do I mean by wrong proportion? Suppose there are 2 raw materials, A and B. A is cheaper, B is costlier. A is cheaper and B is costlier. And I should have taken 10 kg of A, 10 kg of B. Total 20 kg. What if I take 8 kg of A and 12 kgs of B? I consume lesser quantity of cheap raw material and higher quantity of costly raw material. Though my total input is 20 kg, I took in wrong proportion or wrong mix. Even because of this, my material cost, actual material cost, may be higher than standard material cost. So when you have more than one raw material, it is not just about individual material being of poor quality or our employees not knowing how to use materials and there is too much of wastage of raw material. When you have more than one raw material, you also have a problem of mixing them in wrong proportion, which we call as mix variance. We will study it now. So it is not just about calculation of variance. It is important to analyze the reasons as to what went wrong. The last step in standard costing is take appropriate remedial measures wherever necessary in order to maintain and ensure maximum efficiency in future. Okay, this year we have adverse variance. We analyzed, we identified the loopholes, the weak areas. We need to take actions to ensure that this doesn't happen again in future. So it is not just about calculating. That is what we have done in intermediate, just to calculate the variance. In final, step number 4, we analyze the variances. Step number 5, we take remedial measures in order to avoid such adverse variances in future. Variance may be favorable or unfavorable depending upon the circumstance. If actual cost is higher than standard cost, then it is unfavorable. We call it as adverse variance. Let's take an example. Standard cost is 100 rupee, actual cost is 130 rupee. Now the 30 rupee is adverse variance. We write it as ADV. This variance is adverse in nature. What is the other possibility? If actual cost is less than standard cost, then the difference would be termed as favorable variance, which is 100 versus 75. Standard cost, actual cost. The difference of 25 rupee now becomes your favorable variance. A favorable variance contributes to profit, while unfavorable variance reduces the profit. Obviously, when you have favorable variance, what happens? Your actual cost is on a lower side, that increases your profit. When you have unfavorable or adverse variance, what happens? You have actually incurred more cost. When you have higher cost, what happens to the profits? Profits go down. Yes. Now, let us begin with first cost variance, that is material. By the way, in chapter as a whole, you have material cost variance, labor cost variance, variable overhead variance and fixed overhead variance, together overhead variance, and then also income variances, which I'll discuss later. As of now, we are focusing on cost variance. In that, first one is material cost variance. Many students at intermediate level have mugged up some formulas for standard costing, and that is the reason why many students don't like this chapter. But it is important at final level we correct that mistake. We understand what is the reason why I am doing something minus something. Yeah. First of all, material cost variances. Let's ask basic questions to ourselves. We set a standard and we have an actual. The difference between these two should be material cost variance. Very basic and simple thing. How do you set standard cost? How do you set standard material cost? Suppose it's a single raw material, 10 kg multiplied by say 10 rupees. This is 100 rupees of standard cost. One unit has to be produced. You have set a standard for yourself that I should complete the work by using 10 kg, and I know in the market the purchase price of raw material is 10 rupee. Therefore it is 10 kg into 10 rupees, standard cost is 100. And then you start producing that product. End of it, you have actual cost, which is 11 kg into say 12 rupees. Possible anything. I have taken 11 kg into 12 rupee. Now 11 into 12 is 132 rupees. Now 100 rupees standard cost, 130 actual cost, 32 rupees is variance, and this is adverse variance because we have spent more than the standard. Now these things are very basic things. Why should we know standard costing? Is it to find out 32 rupee adverse variance? The answer is no. You don't need a standard costing chapter to find out 32 rupee. Why? I'll tell you, the standard cost is available in your cost sheet. This is available in your cost sheet. You have taken 100 rupee in the cost sheet. So you go to cost sheet, you get this. This is available in your P&L account because these are actual expenses, which means you have cost sheet in one place, P&L in another. You compare that, you get this 32 rupee difference. You don't need a chapter to find out 32 rupee. This chapter is needed to go beyond this to understand whether 32 rupee is due to quantity or 32 rupee is due to rate or price. Now if you observe in my example, the 32 rupee adverse variance is not because of quantity alone. It is not because of rate or price alone. It is the combination of quantity reason as well as rate reason. Why am I saying? Your plan was to consume 10 kg, you have consumed 11 kg, that means you consumed 1 kg extra. Your plan was to pay 10 rupee, but you bought it at 12 rupee, you have paid 2 rupees extra. That means the 32 rupee variance is because of both quantity and rate. Now standard costing is needed to find out how much is due to quantity and how much is due to price. This is the basic purpose. Now, how do we put this in formula? What was 10 kg standard quantity? What was 10 rupee standard price? What is 11 kg actual quantity? 12 rupee actual price. Which means if you want to put it in formula, standard cost is equal to standard quantity into standard price. Actual cost is equal to actual quantity into actual price. That means material cost variance is equal to the difference between standard and actual, which is SQ into SP minus AQ into AP. This is our basic formula of material cost variance. But this is not enough for us. This 32 rupee adverse we are not happy with, because we need to know out of 32 how much is because of quantity, how much is because of price. That discussion we need to start now. I have given a table to make this cost variance exercise easy for you. What is this table all about? Observe here, standard quantity into standard rate. Please remember, standard rate, standard price, this is one and the same. Yeah, I may write standard rate or standard price. You can also interchangeably use it, totally fine. Standard quantity into standard rate. And here, fourth column, I have actual quantity into actual rate, which means this is my standard cost, This is my actual cost. Simple. The difference between column 1 and column 4 should give me that 32 rupee variance that I discussed here. The difference between column 1 and column 4. Now, why do I have other columns? The other columns are necessary, as I told you, to find out whether the variance is because of quantity or price. If it is a single raw material, it is very easy to find out the reason. If it is single raw material, then it is very easy to find out. How? Let's see. In the same problem, 10 kg into 10 rupee, 11 kg into 12 rupee. Now I need to know how much is due to quantity. Now to find out how much is due to quantity, I can simply do this. Standard quantity into standard rate is what I should have spent, but actual quantity into standard rate is what I want to compare with. Why did I take standard rate here and here? Because I need to know the reason, I need to know the variance because of quantity. Therefore, I am only changing quantity. I am keeping the same rate. Indirectly, we are telling the production manager, look brother, out of 32 rupee, we want to know how much is because of wastage in production department, that is excess consumption. He says, sir, entire 32 rupees because of rate. You go to purchase department, they are buying at a costly rate. That is why the variance. But management knows that the variance is not because of only rate. There is some variance because of quantity also. Now, how do I analyze the quantity? I am telling the production manager that, boss, look, I am keeping the same rate, standard rate, standard rate. I am comparing only the difference between standard quantity and actual quantity. Now you observe, he should have consumed 10 kg at 10 rupee, but he has consumed 11 kg, but I am keeping same 10 rupee. So 100 versus 110. Now I know 10 rupee adverse variance is purely due to quantity. He consumed 1 kg extra even if the rate was same. Observe my sentence. He consumed 1 kg extra even if the rate was same 10 rupee. We would still have had 10 rupee of adverse variance. Now on the other side, we need to know how much is due to rate or price. So here what I do. Now I want to know the variance due to rate. Let's take actual quantity into standard rate and compare that with actual quantity into actual rate. Now you observe what I am doing. Observe the highlighted portion. I am keeping the quantity same. Now when I am calculating rate or price variance, I sit with purchase manager. And what purchase manager would always say? That, sir, it is none of my fault. Everything is because of production department. They are consuming more quantity. Now we are telling him that, boss, we are considering actual quantity only. Correct? We are only changing the rate to find out what happened because of you. Now look at this. Actual quantity 11 kg and 11 kg into, we should have bought it at 10 rupee, but we are buying it at 12 rupees. Am I correct? 10 rupee versus 12 rupee. That means we should have spent 110, but we have spent 132. This 110 minus 132, the 22 rupee adverse, this is purely because of rate reasons. I am telling the production manager that even if we had consumed the same quantity, the variance of 22 rupee is because of you. Now you club both these points. 10 rupee adverse variance was because of excess consumption of material, that is quantity reason. 22 rupee adverse is because of extra rate. Now extra rate means the purchase manager is not negotiating well with the supplier. He agreed that he will buy it at 10 rupee, but then he went and bought at 12 rupee. Maybe he's not finding the right supplier or he's not negotiating well. So 22 rupee shows his inefficiency. And if I add these two, 10 adverse and 22 adverse, I have the same 32 adverse with which I started my discussion. Here you can see. Which means we need to expand the table. Just SQ into SP minus AQ into AP will not help. That will only give me 32 rupee. To analyze 32 rupee, I have to expand my table as I did here. SQ into SR versus AQ into SR. That is keeping rate constant only to change the quantity. And here AQ into SR, AQ into AR to keep the quantity same only to change the rate to find out rate or price variance. Therefore, the table goes like this. SQ into SR, the first column. RSQ into SR, the second column. AQ into SR, the third column. AQ into AR, the last column. Now, what is this RSQ? Why is it coming in between? It's a new thing. Now, RSQ is revised standard quantity, and this comes into picture only when I have more than one raw material. More than one raw material. This is to identify the mix variance, the variance that I told you about 15 minutes back. Sometimes the variance may arise because you mix two raw materials in wrong proportion, in wrong ratio. This cannot happen when you have single raw material because there is no question of mixing. It's a single raw material problem. But when you have more than one raw material, you may mix it in wrong ratio, wrong proportion, because of which mix variance may also arise. Now, before I continue, observe this explanation. Total material cost variance, as I told you, can be because of quantity, can be because of rate or price. Now, within quantity, there can be two reasons, assuming more than one raw material. First one is yield variance. What is yield variance? When raw material is not generating expected output. Yield is the ability to generate output. If raw material is of bad quality, where you need 5 kg to make 1 unit, if the material is not of good quality, you may consume 6 kg to get same 1 unit output. That is yield variance. Second one is mix variance, and this arises when you mix two raw materials in incorrect proportion or incorrect ratio. Next one is rate or price variance. That arises because you buy raw material at a higher rate, which means there is variance number 1, variance number 2, variance number 3. Now, to calculate any variance, you need to compare two numbers. Understand? To calculate any variance, you need to compare two numbers. For example, my income variance. How do you calculate? My budgeted income for April month versus actual income for April month. That means to compare you need two numbers, budget and actual. Here standard and actual. That means to calculate three variances, I need minimum 4 columns. Why did I say 4 columns? First variance can be column 1 versus column 2. Next can be column 2 versus column 3. And last can be column 3 versus column 4. This is how you can remember this table. Why table has 4 columns? Because there are 3 variances. Now observe. How to remember the table easily? Always try to write the quantities first. SQ, RSQ, AQ and AQ. Last column, anyway you are in the last column. Last column is AP or AR. All other columns are standard prices or standard rates. Now, something important, notice. In column 1, column 2 and column 3, I am keeping rate constant. That means any variance that arise in 1, 2 and 3 is only because of quantities. I repeat, I am keeping rates constant. That means any difference that I get, suppose this is 120, this is 135, this is 145. The 15 rupee variance here and 10 rupee variance here, both are adverse. These variances are not because of rates at all, because I am keeping standard rate same. All these variances are purely because of quantity. But look at column 3 and column 4. I am keeping actual quantity constant. That means any variance that arise between column 3 and column 4, say 150, this 5 rupee adverse is purely because of rate variance, because what I am changing here is rate, standard rate and actual rate. The rate is getting changed, that means the variance is because of rate. So in summary, how do I remember this table? For material cost variance calculation, when I have more than one raw material, I will have three variances: yield, mix and rate. To find out yield variance, I need two columns: mix variance 2, rate variance 2. But I don't need 1 and 2, 3 and 4, 5 and 6. I can do 1 minus 2, 2 minus 3, both together will give me quantity related variances. Then 3 minus 4 is rate or price. In total, I get cost variance. Now look at this. Column 1 minus 2, material yield variance, the first variance in my chart. 2 minus 3, material mix variance. Now whatever happens in column 1, 2 and 3 is purely because of quantity reasons. It is also called as volume or usage variance. Now 3 minus 4 is purely because of price variance. I told you I am keeping quantity same, changing the rates, and the grand total of all these variances is called material cost variance. Observe, my theory explanation started with material cost variance divided into two parts, under quantity, 2 arrow marks. But my calculation will start from bottom. First yield variance, mix variance together, quantity variance, and then price variance, quantity and price variance together, material cost variance. What if I have single raw material? The problem will be much easier. There won't be mix variance at all. There is no mix variance, so you can remove RSQ column. Now how to fill numbers in this table is the next important discussion. First one is SQ, standard quantity, is standard quantity for actual production. You should not get confused here. It says standard quantity for actual production. Why? Observe this. A company has set standards like this. To produce 1 unit of FG, you need 10 kgs of raw material, 10 kgs of raw materials. In a month, you have produced 20 units of FG by consuming 192 kgs. Now when I have to compare standard quantity with actual quantity, if I compare 10 versus 192, it will be totally meaningless. Why? The 10 kg was for 1 unit, whereas we have produced 20 units. That means I should find out for 1 unit, if I was supposed to consume 10 kg, for 20 units, how much I should have consumed. That is 20 into 10, I should have consumed 200 kg. Compare that with 192. This comparison makes sense. That is why standard quantity SQ is standard quantity for actual production. In this example, actual production was 20 units. I hope this is clear. Some of you may be thinking, instead of doing this, can we do 192 kg by 20 units, 192 by 20, and take 9.6 kg? Can we compare 10 kg with 9.6 kg? Now both are per unit. Why is not this comparison done? Please understand, at the end of the month, you have actual data with you. The standards are always set for 1 unit. To make 1 unit, what do you need? That is how you set the standard. Now actuals are actual numbers that you have is for actual production. So it is always better to shift standard to actual for better comparison than going back from actual to standard. Because at the end of the month you have actual numbers in front of you. You should compare what should have happened with what has actually happened. So we should not go back from actuals. Keep the actuals as it is. Convert your standard, which was for 1 unit, for actual output of 20 units. If you do other way around, that is comparing 10 kg with 9.6 kg, then the variance answer that you get, even that will be for 1 unit. But then if the management wants to know how much they have spent extra from their pocket, they don't want to know how much extra they have spent for one unit. Now the month is over, actual amounts are incurred. They want to know in totality how much extra they have spent. That means they want to compare actual cost with standard cost. The standard cost should be for actual production. That is why it is better to compare 1 unit 10 kg to 20 units 200 kg. Yes, this was note number 1. Second note, RSQ is AQ total in SQ ratio. AQ means actual quantity total, in SQ is standard quantity ratio. Why is this? I have already told you this column number 2, RSQ column, is mainly to calculate mix variance. Now they say RSQ is AQ total in SQ ratio. Let's take an example. A senior employee told junior employee that look, 30 kg output is to be produced. Raw material A and B, 10 kg and 20 kg you have to take and mix them. Let the machine do the job. For 30 kg output, you need to do 10 and 20. After saying this, the senior employee left for the day. Junior employee was supposed to handle that day's operation. Unexpected situation. There is a huge demand for the product that day. Instead of 30 kg production to be made, there was a requirement to produce 60 kg. Now, how much he should have consumed for this 60 kg of production, you will decide based on 1:2 ratio, correct? You will not say take 10 kg and 20 kg and produce 60 kg. 10 and 20 was for 30 kg. Now I have to produce 60 kg. That means I have to keep 1:2 ratio, 10:20 ratio. That means I should consume 20 kg and 40 kg to do the production of 60 kg. Now read that sentence. RSQ is actual quantity total in standard quantity ratio. Now you should have consumed 10 and 20 for 30 kg. 10 and 20 for 30 kg. Now 60 kg output, that means you should have consumed 20 kg and 40 kg. Right? Now, suppose you took exactly 60 kg. Now tell me, there is no variance. There is no variance. You should have taken 60. You took 60 in total. That means yield variance you may not have. But what you may mess up is take 60 kg in total, but you may use 22 kg, 38 kg. 60 kg in total was perfect, but you mixed it in wrong proportion. Observe, there are two different things. Some students get confused. What is yield variance? I should have consumed 60 kg for double production. I consumed total 60 kg only. Fantastic. Yield variance is nil. Yield variance is nil. But you should have mixed 10 and 20 ratio. That means 1:2 ratio. But you have mixed it in the 22:38 ratio. Now what is RSQ? You should have mixed it in 20 and 40 kg. This is RSQ. Total actual quantity is 60 itself. You will get the clarity once I start solving the problem. Total actual quantity, total standard quantity, total actual quantity was same 60 kg. Fantastic. Yield variance nil. But you should have taken 20/40, but you took 22/38. What if this raw material is cheaper and this raw material is costlier? Now see what is happening. You have taken 2 kg extra of costlier material and 2 kg less of cheaper material. You will end up spending more because extra costly item, lesser cheaper item. For this analysis, you need RSQ. You will have to just wait for 2-3 minutes. Once I do one problem, you will clearly understand the purpose of RSQ. Don't worry. Next, single raw material problem, no mix variance, so we can remove column 2. Now if I remove column 2, how will my table be now? You won't have 1 minus 2, 2 minus 3. 3 will continue. 1, 3 and 4 will continue. 2 will go. That means 1 minus 3 will directly become usage variance. Because there is no mixed variance, yield variance itself will be usage variance. Yield variance itself will be usage variance. 1 minus 3, 3 minus 4, directly grand total. Directly the grand total. Simple. If actual quantity consumption is different from actual quantity purchase, then column 3 will be altered as 3.1 and 3.2. This we will discuss little later once we start solving the problems. Let us first do some practical sums to get the basic grip on the table and the concept. First question is a very basic level question, very simple question, concept level. Following is the material cost breakup for 1 unit. That means to produce 1 unit, you need 2 raw materials, 10 kg and 12 kg. And what is the rate? 12 rupees and 10 rupee. That means this is standard quantity of A, standard quantity of B, standard rate of A, standard rate of B. During the month, 20 units were produced by consuming 220 and 330 kgs. Now 20 units is actual production, 220 kg, 330 kg is actual quantity consumed at a rate of 13 and 14. This is your actual rates. This is your actual quantity, actual rate. Calculate material cost variance. Let me start the table first. Here we go. Statement of MCV. There are 2 raw materials, material column A and B. Column 1, column 2, column 3 and column 4. You have standard quantity, revised standard quantity, actual quantity, actual quantity. Last column is actual price. Other columns are standard price. Price or rate, anything is okay. Yes. Now we need to fill the numbers. First one is standard quantity of A. How to do? The question says to make 1 unit you need 10 kg and 12 kg, and we have actually produced 20 units. That means this should be 20 units into 10 kg, that is 200 kg for A and 240 kgs for B. This is kg. 200 and 240, that is based on 10 and 12. Right. RSQ, the second column, that will come later because RSQ is AQ total in SQ ratio. For that I should first fill AQ. Where is my AQ? 220 kg and 330 kgs. This is here 220, 330. Same AQ I can fill here also, 220 and 330. Done. Now what is left out? The quantity column RSQ is left out. Always remember, fill quantities first, then take up rates. Yeah. How to fill RSQ? Working note 1. RSQ is equal to AQ total in SQ ratio. AQ total in SQ ratio. Now how much is AQ total? 220 plus 330, 550 kg you have consumed actually. Now in what ratio you should have consumed? Remember, RSQ is total of AQ. Okay, this is what you have consumed. Now I want to know in what ratio you should have consumed it. In what ratio? SQ ratio. SQ ratio here is 200 is to 240, which means 20 is to 24 ratio. Now if you share it in 20 is to 24 ratio, 550 into 20 by 44, that is 250 kg, and this is 300 kg. Now what is the meaning of these two numbers? Look, you should have consumed, observe my sentence carefully, you should have consumed 200 kg and 240 kg standard quantity. That means totally you should have consumed only 440 kgs. But actually you have consumed 220 plus 330, 550 kg. First of all, you have consumed more. That means yield variance will definitely be adverse. You have consumed more. Now my question is, did you at least mix it in correct ratio? Understand, these are two different things. Did you consume more in total? Yes. That means yield variance will surely be adverse. But did you at least mix it in right ratio? That's what I'm trying to find out here. 550 kg, if you had mixed it in standard ratio, you should have taken 250 kg of A and 300 kg of B. This is my RSQ. Now we need to fill the rates. Where are the rates in the question? In first line and second line you can see the rate per kg 10 and 12 and 10. So standard rate I can fill 12 and 10 everywhere, whereas the actual rate is 13 and 14, 13 and 14. Yes. Now the calculation part. This column will be total. So first one is 200 into 12 plus 240 into 10, 4800. Second one, 240 into 12, 300 into 10, 6000. Next, 220 into 12, 330 into 10, 5940. And last one is 220 into 13, 330 into 14, 7480. Now the variances. First one is material yield variance. I will not just calculate, I will tell you logically what is the reason. This is what some students miss out. You just mug up the formulas, put the numbers, press the calculator, get the answer. You are happy with the number, but you don't know what you are doing. You don't know the reason behind whatever you are doing. Let's understand logically why is a variance is adverse. Yield variance is 4800 minus 6000. 1200 rupee negative means adverse. This is column 1 minus column 2. Next, material mix variance. How to calculate? Column 2 minus 3, that is 6000 minus 5940, that is 60 rupee. I am getting positive number, favorable. Now this is my material usage variance, volume variance or quantity variance. You can write one of the three. Now 1200 adverse, 60 favorable. That means this is 1140 adverse. Next, material price variance, that is column 3 minus 4, 5940 versus 7480, 1540 adverse. Together 2680 adverse. This is material cost variance. Let's analyze the reason. Why is something adverse? Why is something favorable? First one, yield variance is adverse. Why so? Look, you should have consumed 200 kg and 240 kg, but you have consumed 220 and 330. So the total of standard, that is 200 plus 240, it should have been 440 kg, but you have actually consumed 550 kg. You have consumed almost 110 kg extra. When you consume more quantity than necessary, yield variance has to be adverse. Sir, but you are doing 1 minus 2. Why are you comparing 1 minus 3? Understand, column 2 is nothing but column 3 total in the ratio of column 1. So even if you do 250 plus 300, the total comes to same 550. correct? So you should have consumed 440 kg, but you have actually consumed 550 kg. That means you are consuming more than necessary. Yield has to be adverse. Second one, mix variance is favorable. Why favorable? Now observe this. You have consumed extra total kgs, but you have done one good thing. Thank you so much. What is that one good thing? 250 kg RSQ, 220 kg AQ. That means you have consumed 30 kg less of material A, but 30 kg more of material B. This is called wrong proportion. You should have taken 250 and 300, but you took 220, 330. But the good news is the 30 kg you saved here, the 30 kg you saved here was a costly item, 12 rupee. That means you have saved to the organization 30 into 12, 360 rupee. Thank you so much. But you have taken 30 kg extra here, but that is a cheaper item. So 30 kg extra into 10 rupee, you have taken 300 rupee extra. So this 60 is a net benefit that itself is coming here as favorable mix variance. Why is it favorable? You consumed 30 kg less of a costly item and 30 kg more of a cheaper item. That means even when you took higher total quantity, you have done the mixing in a favorable manner where you took more of cheap item and less of costly item. Done. Now together, adverse and favorable, the net number is 1140 adverse. Price variance is adverse. What is the reason? Look at the numbers. What should have been the rate? I'm highlighting in green. The rate should have been 12 and 10. But look what happened to actual rate. 13 and 14. Both raw materials you have paid more. 1 rupee more for A, 4 rupee extra for B. When you are paying more price per kg than anticipated, the variance has to be adverse. There is no other possibility. That is why this number is adverse. When both are adverse, the grand total has to be adverse. So this is the logic behind this table. Easy to remember: SQ, RSQ, AQ, AQ. Last column is AR, other columns are SR. 1 minus 2 yield, 2 minus 3 mix, subtotal usage, 3 minus 4 price, grand total material cost variance. Easy way. Concept is explained here. I hope this is clear to everyone. Yes. Question number 2. Standard set for a chemical mixture of a company is as under: material A and B. Standard mix is 80-20, standard price is 50 and 100. Here observe, they did not give you standard quantity in kg. They gave a ratio 80-20. What does it mean? Look, whatever you take as total quantity, in that ensure 80% is A, 20% is B. If 100 kg is taken, 80 kg, 20 kg, 1000 kg, 800, 200, the standard ratio is given, mix ratio is given, standard rate or standard price given. Standard yield in production 75%. Very important concept. Many students miss out this. Standard yield means what? When I put 100 kg of raw material inside the machine, I know very well that I'm only going to get 75 kg. The 25 kg is loss in production. Sir, does that mean it is adverse variance? No. The wording used here is standard yield. What is the meaning of standard yield? This is a loss that is going to happen. We know it cannot be avoided. It is part and parcel of my production activity. We call it as normal loss. 75% yield means 25% normal loss. Now understand, this is not going to create a problem in yield variance to you. Is this a 25% unexpected loss? Definitely not. When you know 75% is yield, indirectly you are saying 25% will surely be lost, unavoidable, part and parcel of my production activity. That means when you know 80 kg plus 20 kg, 100 kg is going inside the machine, you are aware only 75 will come out. You are aware only 75 will come out. You know, when will you have variances? If you don't even get 75 kg, if you get only 71 kg or 79 kg, that is when you calculate variances. 100 goes inside, only 75 comes out. This is known well in advance. The actual quantity produced was 1800 kg of output from the following. You consumed A and B 1400 and 600 kg, actual price 60 and 90. Now tell me, 1800 kgs output, how much should have been my input? 75% is standard yield. That means if 100 kg goes inside the machine, only 75 comes out. If 1800 has come out, how much should have been my input? Cross multiplication will give me 2400 kg should have been my input. 2400 kg should have been my input. Sir, in that how much is A and B? That's why they said 80% A, 20% B. Understanding, which means before I prepare a table, I have to do the working note to calculate standard quantity and then revise standard quantity. For that AQ total, do you have actual quantity? Yes, 1400 plus 600. You do the total, you get AQ total in SQ ratio. Now SQ ratio can be 8:2 because it is 80%, 20%, which means 8:2. From there, we can start filling all the numbers in the table. Let's begin working note number 1. Question 2. Working note 1. Computation of standard quantity. Anytime you can pause the video and copy the notes if you wish to. Computation of standard quantity. Standard yield is equal to 75%. It means for 100 kgs of input, standard output is 75 kgs. Therefore, how to calculate now? In the question, I am reading from the printout here. 1800 kg is your output, right? So 1800 kg is 75. Then how much is 100? Basically the cross multiplication. 1800 is 75. How much is 100? You can present it this way also. This comes to 2400 kg. What is this now? Standard input in total. Standard input in total. Yes, but for our table, we need to know how much is A and how much is B. I can see in the question it is 80% and 20%. Here is a soft copy. I am just having the printout of my book. 80%, 20%. That means it should be 8:2. That is 1920 kgs for A and 480 kg for B. With this, I got my SQ, the first column in the table. Anyway, we are doing the working note. Standard quantity column is done. Next is RSQ. I can do even that as working note now itself. Working note 2. RSQ is equal to AQ total in SQ ratio. AQ total in SQ ratio. How much is AQ total? That you'll have to see in the question. 1400 plus 600. Here it is. 1400 and 600. Total is 2000 kgs. 2000 kg in SQ ratio. Where is SQ ratio? Same, 8:2, 80:20, or 1920:480. Anyway, it is ratio. Whether you take 8:2 or 80:20 or 1920:480, it is one and the same. 8:2 here. So this is 2000 into 8/10. 1600 kg. This side 400 kg. This is my RSQ. SQ is ready. RSQ is ready. Third column is AQ. Do we have AQ with us? Already given in the question. We don't have to do anything. Last column is also AQ. That's also given in the question. The same number. Now the rates. Standard rates I'm circling in blue. 50 and 100 given. This can be filled in column 1, 2 and 3. Next, actual rate is also given, 60 and 90. This can be filled in column number 4. So column 1, 2, 3 here, column 4 here. I think now we can prepare the table and complete the answer. Yes, right. Let's begin. Statement for material cost variance. Material cost variance. Material, column number 1, 2, 3 and 4, SQ, RSQ, AQ and AQ. Last column is AR, other columns SR. Two raw materials, A and B. First I need to fill the standard quantities. Where do we have the standard quantities? Working note 1, 1920,480. 1920,480. RSQ 1600,400. AQ is given in the question, 1400 and 600. 1400 and 600. Yes. Same number I can fill here also. Yes. Now I need rates, standard rate and actual rate. Both are there in the question. Standard rate 50 and 100. 50, 100. I can fill it everywhere. Column 1, column 2 and column 3. But last column will be actual rate. That number is 60 and 90. So this is 60, this is 90. Now I have to do the total. Total of all these columns. Let me do it. 144,000. 1,20,000. 130,000. Finally 138,000. Now the variances. First one is material yield variance 1 minus 2, mix variance 2 minus 3, usage quantity or volume 1 minus 3, subtotal, that is a better way, subtotal, and then rate or price variance, that is 3 minus 4, and then finally cost variance, that is the grand total. Yes, 1 minus 2, 144,000 minus 1,20,000, 24,000. Favorable because it's a positive number. 1,20,000 minus 1,30,000, 10,000. Adverse. Subtotal is 14,000. Favorable. Next, 8,000 adverse. finally 6,000 rupee favorable. Now, again, how do I analyze the reasons? Why is yield variance favorable? Observe, you should have consumed 1920 plus 480 kgs. 1920 plus 480 kg. 2400 kg should have been consumed. But if you do AQ total or RSQ total, this is coming to 2000 kg. Where you should have consumed 2400 kg, where you should have consumed 2400 kg, you consumed only 2000 kg. That means you are utilizing material well. Maybe you did not waste as much as expected, or maybe the raw material was of better quality. You handled it well, so it gave good yield. That is why yield variance is favorable. Right. Next, mix variance is adverse. Why? Look at this. You should have taken 1600 kg, but you took 1400 kg. 200 kg you saved, but that was a cheaper item, 50 rupee per kg. Yes. Material B, you should have taken 400 kg, you consumed 600 kg, 200 kg extra, and that was costlier item. Which means here 200 kg into 50, 200 kg into 50, 10,000 rupee you saved. Correct? But here 200 kg into 100, 20,000 rupee we lost. Net we lost 10,000 rupees. 20,000 rupee lost, 10,000 rupees saved. Net effect 10,000 loss. That itself is mixed variance, adverse variance. Mixed variance is adverse. This is the reason. Next, rate variance is adverse. Why? Look at this. 50 rupee per kg, you have spent 60 rupee per kg, 10 rupee extra. Now you may observe, sir, but this was 100 per kg, 100 per kg is 90 rupee per kg. We have saved, no sir. Exactly, you have saved. But again, look at the net effect. Here, you spent 10 rupee extra on 1400 kgs. That means 14,000 rupee extra has been spent by you. Here you saved 10 rupee, agreed. But 600 into 10, only 6,000 rupee saved by you. This is extra spent, this is saved. Net 8,000 rupee you have spent extra. That itself is rate variance. That means the concept and the table is very well interlinked. We just mug up everything and we think these are not connected at all. These are very much connected. So in exam also, when you calculate a variance, you need to convince yourself, just like what I did now. My yield variance is favorable. What is the logic? Mixed variance is adverse. What is the logic? I need to convince myself. This will not take more than 30 seconds to convince. Rate variance is adverse. 50 has become 60. Okay, 10 extra. 100 has come down to 90. We have saved, but 1400, that means we have actually spent more. We have saved less. Net is extra loss. Understood? I am convinced that my adverse answer is correct. This clarity you need to get. In examination, this clarity, if you get, you're sure now that your answer is right. And what they ask, I will be doing that in coming sessions. They will not end the question with just calculating variances. They will then give you additional stories, that the production manager is of the opinion point ABCD, purchase manager is of the opinion ABCD. Now you see what is happening. You have yield favorable, mix adverse, rate adverse. You have a meeting happening now. You are having a meeting. Your production manager, purchase manager, top management. You are the cost accountant there. You are all discussing how do we fix these variances. Now production manager will come with his ideas. Purchase manager with his ideas, opinions. Management has to take decision. You need to help them. That means in the coming sessions, we will be studying in detail much more on how do we fix the problems of adverse variances. But for that, you should be convinced in exam that my adverse variance is correct. Number can be here and there, but logically I know this has to be adverse. Only when you get that clarity, you can write additional notes, additional comments. And in CA final exam, as I told you, calculation is 50%, the analysis is another 50%. And you need to be conceptually clear to be able to do the analysis. Calculations can come even if you mug up the formulas, but analysis, comment, advices cannot happen without your conceptual clarity. Yes, right. Sometimes they may ask you to calculate material wise variances. Material wise variances. What is material wise variances? In the above solution, what we are doing, I am highlighting in green, we are doing the totals and comparing 144,000 with 1,20,000. What if they want to know yield variance for material A, yield variance for material B, then what to do? That is called material wise variances. If they ask you material wise variance, then in your solution you need to add one more line here. Each of these calculations you will have to write. Observe, I am writing in black in the table 1920 into 50, 96,000, 480 into 100, 48,000. Next, 1600 into 50, 80,000. This is 40,000. Hope you're following. I'm writing in black in the mid of the table. This is 1400 into 50, 70,000, 60,000. This is 1400 into 60, 84,000, 54,000. Now, if they ask you individual material wise variances, look, I'm highlighting now in blue, sky blue. 96,000 versus 80,000 you need to compare. Column 1 minus column 2 for material A alone. Yes. And column 2 and column 3, 80,000 versus 70,000. Then you will present the answer this way. 1 minus 2, 2 minus 3, subtotal. 3 minus 4, grand total. That is material yield variance, material mix variance, material usage variance, material price variance, material cost variance for A, for B, and then total. Now what will happen? For material A, 96,000 versus 80,000, 16,000 favorable. For material B, 48,000 versus 40,000, 8,000 favorable. Now together 24,000 favorable. You can observe the same 24,000 favorable is what we have written in the above solution already, but that was for total. Here I am breaking it into material A and material B. Now same way, mixed variance, what should I do? Column 2 versus column 3, that is 80,000 versus 70,000, 10,000 favorable. Whereas for material B, 40 versus 60, 20,000 adverse. Therefore net 10,000 adverse. Now when to present this item wise variance? Only when they ask in question. If they don't ask, you show total versus total, that is enough. If they ask you material wise, even in labor variance we will study this, labor wise, individual, skilled labor, unskilled labor, semi-skilled labor. Normally we do the total. What if they ask you each team wise, each group wise variance? Then you will have to do this. So now this will be 26,000 favorable. This will be 12,000 adverse. Therefore this is 14,000 favorable. Next, 3 minus 4, that is 70 versus 84, 14,000 adverse. And 60 versus 54, 6,000 favorable. Together 8,000 adverse. Therefore this is 12,000 favorable. This is 6,000 adverse. Net 6,000 favorable. Now sir, calculations are fine. What is the use of knowing this material wise variance? The purpose is to know whether our focus in the coming year should be on material A or material B. Now I know material A is giving me 12,000 rupee of favorable variance. So if I have to do something, I should first focus on B, not on A. If this B 6,000 adverse variance even comes down to nil, as a company as a whole, I will have 12,000 favorable. I am still happy. Correct? The purpose of doing item wise variance analysis is to know where should we fix the problem first. Sir, one doubt, what if both are adverse variances? Then in that you prioritize which is the higher adverse variance, that item you try to fix. Now looking at this, material B, my yield variance is favorable, but mix variance is adverse. So next time when a new employee is mixing two raw materials, I need to be careful because I have an experience. Material B is very costly. If this junior employee mixes it in wrong ratio, the entire cost variance can become adverse. So I will be very careful next time whenever I am asking a new employee to mix two raw materials, because I can see majority of the variances because of this 26,000 adverse variance is a very big number. Correct? Even if that was nil, our position would be in so green, that is so much of favorable variance we would have seen if that 20,000 adverse was avoided. So I will now know that, look, I now know that next year, next month, when someone is mixing the raw material, be very careful. That too, be cautious about material B. It is a costly item. If they are consuming too many kgs, his supervisor should be there to stop. The purpose of doing item-wise analysis is to take decisions to control this cost in the coming period. Yes, right. With this, we are done with question number 2 as well. Yes, right. We will now take a small break and then continue.